Dalio and I are on the same page as it relates to history being a guide, especially around revolutions, considering they happen after extreme levels of political polarization, conflicts between nations and ideologies, and economic problems that exacerbate inequality. All of these ingredients exist right now, and that data I'll share with you today, that'll prepare you for what is coming or what may have, frankly, already started. Because there will be opportunities, but it will get worse before it gets better. And the most important thing is that you learn how to be in the right place at the right time with the right asset. Coming up. I'm Lynette Zhang, Chief Market Analyst here at ITM Trading, and I'd like to welcome you to today's revolution that is upon us. And we've been talking about this particularly as it pertains to community. And I said, is this the rise? Is this the rise? And frankly, I think that it is. And let's go back in history so I can show you where we were and you can see where we are right now, because these patterns repeat. So what you're looking at is union membership and income inequality over time. And first I want to take you back to 1933. And even during the Depression, what do we see? We see that income inequality continued to go up. So those 1%ers continued to even make more money. During the Depression, not everybody was depressed. The public was, but the 1%ers, a lot of them lost their wealth during the 29 crash, but a lot of them did not. You know the pictures, well, that are behind me in the other office, and I show you Seabiscuit. That was a $100,000 pot, and that was a lot of money back then. Look at also where the unions are, way at the bottom. So once we hit a peak, what did we see happen? We saw the 1%ers income decline while unionization spiked big. And then, of course, we went to 1971 and 1980s, and all of that shifted again, where we see that income inequality start to get wider and wider and wider, and truthfully near the levels, both of them are near the levels that they were back in 33. So do you think that this could be a repetition of history? Because I do. I've been talking quite a bit about the rise of the unions. Here, now this graph refers to 2020, and we know what's been happening in 2022 and 2023. But today there were 65 fewer union members than there were in 1945. Isn't that interesting? With the 1% share of income near the all-time highs. So this is the backdrop and the setup, because we are seeing the rise in the worker. The tides may be shifting once again as union membership increased by 7.4% between 20 and 21, and more young people are favoring unions. Well, yeah, when things are not equal and they get to an extreme level, guess what? People notice. So I believe that this is where we are right now. And I think the revolution, frankly, has already begun. Maybe we can't see it, but sky-high CEO pay is in focus as workers everywhere are demanding higher wages. Now, of course, we are on the precipice of a financial crisis, but let's just see where we are because most people don't see that. Growth in CEO compensation during the pandemic, 2019 to 2021, the dramatic increase in CEO compensation during the pandemic is remarkable. While millions lost jobs in the first year of the pandemic and suffered real wage declines due to inflation, in the second year, CEOs realized compensation jumped 30.3% between 2019 and 2021, and the typical workers' compensation among those who remained employed rose 3.9% over the same time. That became very obvious. Now, we just had some success at the UAW, and remember, success begets success. So at the three key auto factories, CEO to worker pay ratio, Mary Barra, 362 to 1. So she made over $29 million. The medium worker made $80,000. In Ford, it was 281 to 1. Jim Farley, 21 million, median worker, 74,700. And at Stellantis, 365 to 1. So Carlos Tavares, 24.8 million, average worker, 67,789. Well, that ticks people off, doesn't it? Recent estimates suggest that CEOs at one of the top 350 U.S. firms earn $27.8 million per year on average. That is 399 times what the typical worker earns and 1,460% more than executives earned in 1978, adjusted for inflation. And research suggests this growing dynamic of huge pay disparities between employees and executives produces psychological side effects. Yeah, what does the worker say? Hey, this is not fair. We demand more. With CEO worker pay ratios at all-time highs, workers are demanding change. Can you see the revolution? Can we join the revolution even without being part of a union? Yeah, we can. Because what did the central bankers say? Britain, I can't even believe some of the things that come out of their mouths. Do they ever check? Britons need to accept they are poorer, says Bank of England economist. This was just back in April. Hugh Pill says a game of pass the parcel is going on as households and companies try to pass on their higher costs. How dare they? They should just let us do all that we want to abuse them after all. Stop complaining. You're poorer. Too bad. So sad. Who cares? British households and businesses need to accept they are poorer and stop seeking pay increases and pushing prices higher. Because that's what's pushing the prices higher. You asking for more money, not this garbage that they want to feed. I wish that could happen to them. It will. Okay, but you got to ask yourself, is this what every central banker really thinks? Just get used to it. Just accept it. We're going to abuse you, and too bad, so sad. You just have to accept it. Well, they're not accepting it, and we shouldn't accept it. And what they have coming down the pike with us with the CBDCs, the central bank digital currencies, will make this worse. Worse and worse and worse. Just accept the fact that we are going to control every aspect of your life and that you will be forced to think the way we want you to think overtly because they've been doing that with perception management forever. You have to ask yourself, is that okay with you? Or can we be part of this revolution that is unfolding? Because we have that opportunity now. Cities, states, and federal governments, for that matter, contend with more strikes as unions gain power. Strikes will squeeze budgets, causing local economies to weaken. Because what happens is when people are out on strike, they aren't making as much money, and therefore tax revenues are down. Hospitals are vulnerable. Well, yeah, they are. A widening gap with the private sector and the erosive effects of inflation are spurring workers to action, supported by what Barclays describes as rising public approval of unions. This is a quiet revolution, but it can get very noisy, and we need to be part of this and part of this community. This year has seen 312 strikes involving about 453,000 workers compared with 180 strikes encompassing 43,700 workers 2 years ago. Now, I want to back up to move forward here as well, because what we were seeing in 2019 was global protests, right? The public was getting very unhappy with what they were seeing as income and wealth inequality. Well, what happened in 2020 kind of quashed that down. Hong Kong is a great example of that because they had a rising Democratic Party and the public was revolting. They wanted more democracy, but they were tied to China. And during the pandemic, dare I use that word? I don't know that it matters as much anymore, but during that period of time, they were able to come in and absolutely quash that revolution. Well, a growing revolution on a global basis is happening again. Maybe not in Hong Kong, but that revolution is definitely growing. Strikes have multi-pronged negative effects on local, state, and the national economy, including missed work time and lower fees and tax revenues. Booty hooty Rudy Manuti, and this is for Sari, who was asking me what that term was. I said, I don't know, because it just comes out when it comes out. But there you go. Yeah, rise of the worker. New BLS data, union membership grows by more than 200,000 in 2022. So can you see this evolution? Despite broken labor laws and rampant union busting, working people are undeterred in their pursuit of a union. The year 2022 saw a reinvigorated labor movement, one led by young workers and workers of color who organized at a clip not seen in years. How about not seen since back in 33, in that period of time? How about that this is history repeating itself? The trend has been on the rise since 2010, and the increased enthusiasm for organized labor is beginning to manifest itself in newly formed union in recent years. The number of elections held in U.S. workplaces to decide whether workers can collectively bargain with their employer rose 51% in 2022 compared to the year before. Well, what do you think? Do you think that this is an indication that the revolution has begun? Because I think so. Public approval of unions reached a modern high over the past year, with at least 7 in 10 Americans, 71%, thinking favorably of unions compared with 68% of Americans in 2021. It's happening, people. Let us come together in community and support this so that we can retain our freedom and our choices. It's critical. If we are divided, we have no hope. If we come together, we can beat them. There's more of us than there are of them. Here's that 51% or that 49%. Nearly half of all union drives were successful in 2022. Yay! Campaigns of workers have been increasingly successful in forming new unions in the last decade because a success begets success. So others are watching what just happened with the UAW, and they're going, well, maybe we can have that success too. And so it just compounds. The rate represents how many union elections resulted in a new union as a percentage of all election cases filed by workers in a calendar year. Large work stoppages inch toward pre-pandemic rate. So that's what I was talking about before. We were seeing this happen before the pandemic, and then the pandemic quashed it, but it's rising again. Work stoppages conducted by 1,000 or more workers grew again in 2022 after a dip at the onset of the pandemic. The momentum of the moment we are in is clear. Organizing victories are happening in every industry, public and private, and every sector of our economy, all across the country. This is our opportunity. This isn't something that we have to start. This is just something we have to join and support. Can you see this happening? This is our chance. This is it. Let's all come together in community because there are more of us than there are of them. And while we are seeing central banks buying gold at a clip never seen before, we're also watching the public become more aware of gold, of the one thing that can actually protect you because it's out of the system. They can't control it. That's why they don't want you to buy it at the same time that they are buying it as fast as they can, faster than ever in their recorded history. Bar and coin demand. So this is public demand. So far in 2023, this is the third quarter as of September 30th, is on par with the last 2 years of healthy investment. You think? Looks like the revolution has begun. Be part of it. Own gold, own silver, hold it, own it, because everything else is a contract. Everything else runs counterparty risk, and they will use that to control you. This, they can't really control because it's used in every single sector of the global economy. So 100% of the time, there is demand. When you look at those spot market charts, those are contracts. It's not real. With physical gold and silver, there's a finite amount. With the digital gold and silver, there's an infinite amount. Don't believe the lies. Come together in community. Position into your gold and silver, because that's also going to put you in the right place at the right time to take advantage of the opportunities that present during these periods. If we don't do this, we're going back to feudal times, period. I mean, it really is just that simple. Get on board, because otherwise they'll just be these 1%ers and they own everything. And you and I and the public, they're going to have to lease everything. Guess who controls it when they own it? So let's avoid that. And we can, just by positioning into gold and silver. So if you haven't clicked that Calendly link yet and set up your own gold and silver strategy and establish your strategy for how you are going to thrive through this, then the time to do it is right now. Because look, you can watch last week's video. Insiders cash out as the empire crumbles. We are watching the rats desert a sinking ship. Don't go down with the ship. Float above it so that, hey, never let a good crisis go to waste. How about this time the wealth transfers the public's way? How about that? How about if we take back our power so we retain our choices? Because we certainly can see that those that are in power are not doing this for you and me. They're doing it for themselves to remain in power. And their job is to lie to you because they got to keep you in the system. But we have this opportunity, the rise of the worker. How about the rise of the public? Let's come together. Let's make this happen. And if you haven't yet done this, definitely you need to be subscribing. Leave us a comment, give us a thumbs up, and share. Because together, we are so much stronger. And we are. We are all in this together. This, my friends, is your financial shield, your wealth shield. Physical gold, physical silver in your possession. Get it done. Time is running out and time is of the essence. And until next we meet, please be safe out there. Bye-bye.